Welcome, everyone. This is Walt Kasmir, your favorite host. Today, I have a special guest again. As I always promise, I promise to bring you relevant, impactful, insightful information. Today, we are bringing in an expert with over 20 years of experience in the insurance industry. And I mean, this man has credentials. I call him, he's part of the Alphabet Club. I'll let him introduce himself and tell you all of his credentials. But when I double check to look his credentials up, I mean, he can sell insurance in multiple states. He is certified 2 or 3 times. He's an instructor extraordinaire. I mean, if you want an excellent insurance agent and someone who will give you the straight information, you cannot miss with none other than Darrin Rankin. Darrin, can you tell the people about your practice and the states that you sell insurance in and all those good things?
Absolutely. Walter, first, thank you for having me on Critical Conversations. It's a pleasure to be here. My name is Darrin Rankin. I own an insurance agency, an independent insurance agency, which means we represent multiple carriers. It's called the Rankin Insurance Group, and we're located in Huntersville, North Carolina. We've been in business for 20 years. We actually started October 1st, 2001. So we just hit the 20-year mark. We do business in North Carolina, South Carolina, Georgia, Virginia, Pennsylvania, Ohio, and Maryland. So it's great to be here today and interact with your listeners.
Well, Darrin, I'm glad to have you here. And if you guys were sleeping on that, Darrin is licensed to sell insurance in North Carolina, South Carolina, Georgia, Virginia, Pennsylvania, Ohio, and Maryland. So if you're in this region, Darrin can help you out with that. In addition to being licensed in multiple states, Darrin is, as I said, he is certified in a couple different specialties, and to top it off, he has an MBA. So, Darrin, can you just tell us a little bit more about these credentials?
Absolutely. I'm a student of the industry. So I believe in learning, continuous learning when you're in the insurance industry. So I have my MBA from Syracuse University. I am a certified professional insurance agent. It's a CPIA designation. Also have my associates in insurance services. It's an AIS insurance designation. And then I have a CIC insurance designation, which stands for Certified Insurance Counselor. So outside of selling insurance, I am an instructor for the CIC program. I'm a national faculty member, so I travel throughout the country to do the CIC updates for those people pursuing their own CIC designation. I also teach their CISR designation programs for life and health. And then I am a local instructor for Central Piedmont Community College, where I teach individuals property and casualty pre-licensing information so they can go out and get their insurance license.
So in short, Darrin's kind of a big deal. I mean, this guy knows what he's doing. He's been in the industry 2 decades, and they have acknowledged his expertise by granting him teaching assignments. He's earned several designations of excellence, and I wouldn't have it any other way. I when I looked up your profile, I didn't realize it's been 20 years. So did I get in at the ground floor when you got started?
You did. You're one of the first ones. I appreciate your support all these years.
I can't remember how I even found out about you. I think it was Herman McKinney, but I'm not sure.
Herman's still one of our clients, so he's been with me for a long time as well. Yes.
Okay. And I believe in supporting people who operate in excellence and recirculating those dollars.
I appreciate it. We just look to make sure we take care of our clients. We cannot always help everybody, but we're straight shooters. We give people great information and great counsel, and that's what we pride ourselves on.
And you do that indeed. As I said, people, I have had Darrin for 20 years, and I highly recommend him. it's not often that you adjust insurance or you don't talk to them every day, but whenever I call, if Darrin isn't making big deals, I can get through and he gives me relevant, impactful, well thought out information. Um, so we are glad to have you. And I like to tell people what we're going to talk about it, and then tell them what we said. So what I want you to talk to the people about, Darrin, is explain just the basic concepts of insurance, why it's relevant, why it's important, why I'm assuming that a lot of people are underinsured, why may that be, and just give us an education on the different types of insurance products in general.
Absolutely, absolutely. So, insurance is typically something nobody wants to talk about. It's that one bill no one wants to pay. So, I get it. But what it does do is it provides peace of mind. It provides peace of mind for people who have purchased the product, who understand the product, and made a commitment to make sure they are protected from a financial standpoint in the event of an unfortunate circumstance, whether that's a storm, an accident. They've made a commitment, they understand the product, and they've decided to go out and purchase some coverage. The hope is that people make it a priority to purchase adequate coverage, for their property in the event that it's damaged, destroyed, or stolen, as well as an adequate amount of liability insurance or coverage in the event that they're sued by somebody. We try to
Mm.
protect their assets. So there are multiple insurance products. You have auto, home, renter's insurance, business insurance, workers' compensation, commercial auto. We have professional liability. You have health insurance, long-term care, disability insurance, life insurance. So there are a lot of products out there, and we're not trying to make people insurance poor, but we
Mm-hmm.
do want to have some valuable conversation, give them some valuable information, something that's pertinent, so they can go back, have a discussion with a loved one or someone else, and make a decision whether or not the product is something that they need to look into further, maybe do some more research on, or something they need to purchase.
Now, I particularly want you to talk about the difference between whole life and term,
Mhm.
and maybe some of the frequently asked questions that you receive at your insurance agency.
Absolutely. So people typically ask, what's better? Is term insurance better than whole life? Is whole life better than term? The answer is neither one of them are better, right? As long as you have a policy in force when you pass away or when the loved one pass away, you have great protection. Now, statistically speaking, most people will outlive the term policy. Most people will outlive the term, but they do pay a ton of claims under a term life insurance. It is the more affordable route for most people to go to, but it's not necessarily the best amount. It depends on a person's situation, which policy they should purchase. Maybe they need to have both. I have both policies, and I have both policies for different reasons. So if we can sit down with an individual, a couple, a family, and have some open dialogue, we can kind of dig through the information. We can uncover some good information, the need, the reason they're asking or inquiring about life insurance, so that they can make a great decision. Term insurance is temporary. So you can have a 1 year term policy, a 5 year term policy, 10-year term, 15-year term, 20-year term, 30-year term. There may even be a 40-year term. I've heard some chatter about that in the marketplace, that there may be a 40-year term product on the market.
Mm.
But you'll have coverage for that set period of time. It's very affordable. It's nothing that someone should turn their nose up at. It depends on a person's budget. When a
Hmm.
person commits to buying a life insurance product, they're doing it not just for themselves, but they're doing it for someone else. So the reason for buying it and your financial situation should basically dictate which product you sort of levitate toward.
Okay, now, so we can give the people a concrete example. Uh, I'm okay with sharing my example. So I just recently decided to get two whole life policies for my wife and myself based on our age, and not in my from my perspective. not wanting to just pay premiums and then not have any cash value.
Any cash
And
value.
Darrin advised me on going with two whole life policies. Can you give the audience a little bit of a peer into your rationale, advising me on that route?
Absolutely. So, when you look at a individual who's looking to purchase some life insurance, one of the main questions is, do they have insurance outside of this conversation? So, insurance at work, maybe another policy enforced with a different agent or a different agency. That's one of the questions we kind of go through. And then we look at their current age. So, you look at an individual and maybe they're in their mid 40s, right? And they have no other life insurance. So, the question comes up in my mind right away is, why are you looking to purchase it? Is it just for a final expense? Is it an immediate need? Like maybe you have a loan that you're trying to cover in the event that you pass away, or are you really doing some long-term planning? And most of the time, people in their 40s, they are at a point where they're looking to do some long-term planning. So it's a point in life where if you don't have a permanent product, that's really the way to go. You want to tackle that challenge or that issue. You want to fill that void with a permanent product, and you really don't have to revisit it. You can add more coverage later. You can buy a different policy or another policy if you want to put on top of it. But buying a permanent policy basically gives you coverage for the rest of your life. We do know as most people age, their health typically declines. And so, if you don't capture or purchase a permanent policy at an early stage where you're relatively healthy or you're relatively young, you could find yourself in a situation where you become uninsurable. Now, if you are healthy and maybe you're 60 years old, 65 years old, 70 years old, buying a permanent policy at that age, just based purely on age, could be outside of a person's budget. So it kind of depends. Finances are always one of the factors when someone's looking at deciding on a permanent policy. And we try to go through some questions and ask people, why are they looking to purchase insurance? Is it for final expenses? Is it for legacy? Are they trying to leave some money to a charity or a loved one? We try to uncover the need and the reason why they're looking into coverage. So my rationale is, hey, we're at a point right now where you want to lock in some permanent protection. Right now, the rates are affordable, and this will basically carry you the rest of your life. And you decide, who gets the money as, the time comes where, you pass away or you transition, and, you decide who the beneficiary is going to be. Now, having a permanent life insurance policy, it gives a lot of people access to money, access to cash. And people can use that cash for different reasons. You can come back to the insurance company and take out a loan. Maybe you want to buy a vehicle or put a down payment down on a vehicle. You can use the money for that. Maybe you have a cash crunch and you need some money. You can come back to the life insurance company if you have a permanent policy and take a loan out on that policy. Maybe you're at a stage where it's a long-term care need and you're going to need some cash, and you can access cash if you have a permanent policy. So those are some of the things we think about, some of the factors we put in as far as a person looking to purchase a permanent insurance product like whole life.
Now, Darrin, you used a couple terms interchangeably, and I don't want to assume that people followed that. And I would think that people who don't actually call up their agent and get a free education from them like I do, tell us, clarify for us about when you're using the terms permanent versus term and whole life, and you kind of use those interchangeably. I know that's an industry second nature, but clarify that for our audience there.
Yeah, so the term life insurance is temporary life insurance, and 30 years is not, the 30 years could be temporary, right? It is a long block of time, but when you compare it to a permanent product, by definition, it would be temporary. So the term products, 5-year, 10-year, 15, 20, 30-year term product is a temporary insurance. So that's a temporary product. The permanent products are typically whole life or universal life insurance. And between those two, whole life is typically the one that most people can understand because there is a lot of stability in the product. Premiums are level. The coverage amount is level. It doesn't change over time. So that's typically the one we will gravitate toward, because for the consumer, it's much, much easier for them to wrap their mind around. So permanent protection will basically cover you, depending on when you buy it, from the womb to the tomb, from sunrise to sunset, your entire life, and especially whole life. So people understand that, when you
Hmm.
purchase a whole life policy, how long do you have coverage? Well, your whole life, as long as you
Okay.
pay the premium.
Right.
So people love the whole life product because they can understand it a lot better.
Now, I also heard you mention buying the policy while you're still insurable. Now, tell us a little bit more about that. Let's go in a little deeper so people can get a clearer understanding of what you mean by that, and the rationale and the risk management that the insurance companies are taking when they do the underwriting.
Yeah. So when it comes to underwriting, insurance companies, obviously they're looking to make money, right? So that's a number one priority. They're looking to make money. So they're not looking to insure someone who is in failing health, because a claim is coming a lot sooner than later. So they may not be able to make money off that particular policy. So the idea really in insurance, when you're purchasing insurance, is to purchase it when you're healthy. So if you can put it on your radar, if you can make it a priority when earlier in life, in your 20s, in your 30s, in your 40s, that is really the best time to go out and purchase permanent insurance. So if you look at pricing for a 20-year-old individual, they can go out and buy a $100,000 whole life policy, and the premium might be about $75 a month, which is could be fairly expensive. They can also go out and buy a 10-year, $100,000 term policy, and that premium may be $15 a month. Big difference in cost? Absolutely. Absolutely. For the whole life policy, the insurance company is going to pay a claim at some point. They are going to pay a claim. So it's not a question of if, it's a question of when a person purchases a whole life policy. The insurance company will pay a claim. When you look at term life insurance, life expectancy is about what, 77, 78 in the US.
Yeah.
So if you're a 20-year-old and you buy a 10-year policy, chances of you dying in the next 10 years are slim to none. But accidents happen, right? Accidents happen. And if an accident were to occur, would the insurance company pay the claim? Absolutely. But statistically speaking, you're not near the end of life. You're not at life expectancy. So term is priced much more affordable than permanent insurance is. And it's because most people will outlive the term. As a person ages, like as you approach your 50s, your 60s, you're no longer going to be eligible to purchase a 30-year term policy. Why? Because it takes you beyond life expectancy.
Hmm.
So the 30-year goes away. It's no longer an option. The 20-year may go away, depending on the age when you begin to attempt to purchase a policy or apply for coverage. And then gradually the 10-year comes off the table. And if you have not purchased any permanent protection before then, that's the only resort or the only option a person has as they get older. And it is typically unaffordable for most people when they wait too long to purchase permanent protection.
Now, Darren, you said don't wait too long, and you kind of alluded to 50s and 60s. Is there a definite cutoff point where we should be making a decision? Let's say
Definitely
50
cutoff
years
point.
ago.
Yeah, I don't know if there's really a definite cutoff point. It really depends on a person's budget. You never want to say it's too expensive for a person, but the price does snowball as a person gets older. So you could look at keep in mind the 20-year person that buys $100,000 whole life policy. Their premium is going to be about $75 a month. If you wait until you're about 60 and you're trying to buy a $100,000 whole life policy, your premium might be $190 a month, 210, somewhere in that range. And that could be unaffordable to some people in terms of their budget. But is there a cutoff time? I would say hopefully, or the goal is for most people to put in place a life insurance program maybe by mid 30s. That would probably be ideal.
Okay. So mid-30s is ideal. Now, you also mentioned health issues. Now, I worked in the insurance industry in healthcare, and I know that there's a phenomenon called utilization management. I guess the equivalent would be actuarial science in the life and auto home and auto policy industry. Basically, they're trying to mitigate risk. Um, what are some of the health problems that would preclude us from being insurable? I know in certain communities, we are disproportionately burdened with hypertension, diabetes, and so forth. Can you elaborate on that for us a little bit?
It's That's a hard question. I will tell you, there are pretty much some knockout questions. If a person had heart surgery, that will probably knock you out of the market as far as consideration for probably a 5 to 10 year period. Maybe a little bit shorter than 10 years, but heart surgery. If a person had a stroke, if a person has severe diabetes, some people have diet control when it comes to diabetes. Some people are on insulin control. So it kind of depends on what type of diabetes you have, the age at which diabetes began for you. They will look at family history as part of the consideration. If mom, dad, grandma, all of them had diabetes, they died at a young age, then you're probably going to die at a young age also. So family history is a big driver, but stroke, heart surgery, dementia is one. Cancer is a big one. Those things could be a knockout question for a lot of people. Just having hypertension, not a big deal. Being diabetic, if you're on diet control, not too big of a deal. You may pay a little bit more for your insurance, 20% more, 30% more than a quote unquote healthy individual, but it may not necessarily keep you from purchasing coverage. There are some people though that get straight out declined, and that would definitely be someone that is dealing with cancer, someone
Mhm.
who has had a bypass surgery, maybe a stent or two, someone who has just degrading health at that point. The insurance company will not go out on a limb and issue a policy for those individuals.
Now, you said something that kind of piqued my interest when you said uh, getting insurance while you're still insurable. So, if we get a policy and we prove our insurability, can that is that a permanent status, or can underwriting decide not to insure us later after we have bought a whole life policy?
Yeah. So once the underwriting is complete and they have accepted you as an applicant and issued a policy, if your health status changes or the quality of health changes down the road, the policy remains in force. There's nothing they can do. They cannot take coverage away from you. So you will always have that coverage, depending on the type of product you purchase. So that's where, the whole life one can be very, very important to some people. If you were 25, 30 years old and you bought a term policy, 30-year term, and between purchasing the policy and before the term ends, you end up having some terrible luck in terms of your health, and you end up having, maybe heart surgery. That could make you uninsurable going forward. So, would you have coverage while the term is in force? Absolutely.
Yeah.
But as you begin to look for new coverage to replace the term, you may not be able to find coverage. So, if you contrast that with buying whole life early, you always have protection. Always have protection. So, I'm a big advocate for permanent insurance at any age, because you will have coverage your whole life, regardless of your ups and downs in terms of your health. It is a great product to have. It is an asset. It does develop or accumulate cash value. It can be a great product for people.
Now, Darren, you mentioned accumulating value for the cash value of the whole life, and you advocate people getting started earlier than later. Can you give us a generic example of what type of cumulative uh, interest that a whole life would accrue over
Mhm.
a period of time? Let's say they started in their 20s or 30s, and they somebody hears this and they go out and get a policy, and they're a millennial. What kind of increase in value can they expect?
Yeah, so if the sooner you're able to buy it, the better. So if you have someone who's 18, 19, 20, late 20s, and they decide to buy some permanent insurance, it's a great decision. They can't go wrong with it. So they decide to buy $100,000 policy. So between the time they purchase it and the time they hit the age of 100, maybe 110, they will accumulate $100,000 of cash inside of that policy. $100,000 where they can, take a loan from, $100,000 that they can use the money for long-term care or whatever reason they need it for throughout the life of the policy. So they can accumulate some big money. They can accumulate some big money. So the face amount, how much coverage you purchase, is going to be the maximum amount of cash available in the policy. So, people would watch TV shows or infomercials, and they would call me and say, "Hey, Mr. Rankin, do you sell a whole life policy?" Yes, I do. That's the one that accumulates cash, right? Yes, yes, it does. I want to buy a $10,000 whole life policy. Well, imagine the same scenario, right? They're 25 years old. So by the time they hit the age 100 or 110, all they're going to accumulate is $10,000 of cash.
Oh
So their
man.
premium is very low. So the accumulation of cash is going to be a very slow accumulation of cash. You got to be putting some decent money in to really build the cash value, and it doesn't have to be, astronomical, but the face value for most people, you don't want it any less than 25,000. 50 is a good number, 100,000 is a good number. If a person is trying to build some money for retirement or whatever reason down the road, then we can go higher. We can do 250, 300,000 for a permanent policy, because if they can grab that policy while they're still young, premiums are very affordable, and it's basically saving money, and you're purchasing insurance at the same time. So if you can do it early, it's a win-win on so many levels for people.
Okay, people. So, in case you were sleeping or you dozed off with your attention span during that critical moment that he gave us, start early as possible, be consistent, and pay yourself first to accumulate cash value. And for a lot of us, creating a legacy for the first time in your lineage. That will definitely be the case in my situation. I wasn't fortunate enough to receive an inheritance, so that vehicle will be part of my daughter's legacy, is buying her this whole life, and she's going to benefit one way or the other. And can you just elaborate a little bit more about cashing out and the difference between the face value of a whole policy and maybe buying a long-term care policy? What would be the comparisons and contrasts between those two products?
So those two, they're kind of apples and oranges. The long-term care and the life insurance policy. If you buy a permanent life insurance policy, you can definitely use some of the cash as you get older, if you were to need it to supplement your long-term care expenses. So it's a great product to have as you look down the road and you think about, I'm not quite sure how long I live or what my long-term care plan is going to look like, but I do know I need to have some money set aside in some fashion to help with those expenses. So the permanent life insurance policy is a great policy to purchase to kind of help a person plan for long-term care should they need it. Now, everybody doesn't need long-term care, so that's number one. People need to look at their health status. How healthy am I at whatever age? We're having that conversation. Maybe how long their parents have lived. Did their parents live into their 80s and 90s? Did they end up going into a nursing home? Did they stay in their personal residence the entire time until they passed away? You kind of use your parents as a little bit of a guide. You may be entirely different than your parents. Your parents may have passed away early 50s, early 60s, and you are by far much healthier than they are. Family dynamics is a big thing when you're looking at your long-term care. Do you have children around that may help you? Is your spouse younger or older? Do you have money in the bank? Or do you have a long-term care policy that you've purchased in the event that you need some long-term care? So long-term care insurance, it is a separate policy. And a lot of insurance companies have stopped selling it. Many still are offering long term care policies, but a lot of individuals feel like long term care may not be a great product for me because if I never need that type of care, I've wasted these premiums over the year and they feel like they've thrown money away. So they begin to look at life insurance, cash value life insurance, meaning whole life, as a way to save some money. And they understand that they are going to receive a benefit in some fashion. If they live long enough and they need some long term care, they can begin to take money out of the policy to use to pay those expenses. Or if they pass away, their loved one will benefit from the death benefit associated with the whole life policy. So they kind of look at it as a win win, a multi purpose type product where, it will serve a good need for them as they begin to age.
Well, Darrin, this is certainly some valuable information. I hope that anyone watching will actually take action on these tips from an a licensed insurance agent who's licensed in multiple states, who's been in this industry over 20 years, who is a instructor at the National Academy. You are getting sound, solid advice here, and I am myself have definitely relied on Darrin's expertise over the years, and I'm planning to do more. So I'm definitely an advocate of doing the part that you can do. We don't all have to be financial experts like Darrin, but part of the money that you do pay someone like Darrin is you should be able to talk to them and find out at least the basic concepts of these instruments and the relevance of these. So we're going to stop it there. We could talk about this for hours. Hopefully, Darrin, you'll come back and then go in depth into some more of these specific topics. But I think that's plenty enough for people to grapple with at this time. And like I said, make an action plan and actually start to purchase some of these financial vehicles, or at least talk to an informed agent like Mr. Rankin here. So as we part, Darrin, can you give the people a takeaway point for what we discussed tonight?
Absolutely. The conversation about life insurance, it doesn't have to be, so dreadful. It doesn't have to be so dreadful. All it is getting your finances in order and you're basically protecting your loved ones. Too many times people don't plan. And when something happens, something unexpected, GoFundMe seems to be the go to mechanism for a lot of people. And, it doesn't always work out. Sometimes it does, sometimes it does not. But what it does do is it creates an avoidable amount of stress on the survivors. If you can, when someone passes away, there is a lot of emotions going on. And if you can remove the financial pressure, right? The financial emotions, how am I going to bury somebody? How are we going to pay for these services? If you can remove that from the equation, then you've done your loved ones a tremendous amount of justice. So, I encourage people to just kind of have an open mind, They say there's, in life, there's two things that you can't avoid: death and taxes. It
Yeah.
doesn't have to be such a dreadful conversation, but just think about it from a planning standpoint. And you really don't want to leave your loved ones behind scrambling and dealing with the financial burden of trying to, take care of your final expense if something were to happen to you.
Well, Darrin, thank you for taking the time out of your busy schedule to enlighten us. Can you tell the people how they can get in contact with you and learn more about being financially responsible and starting a legacy?
Absolutely, absolutely. Feel free to contact me. Our office number is 704-896-9393, 704-896-9393. Or if you want to shoot us an email, our email address is info at Rankin, Rankin, insurancegroup.com. You can also reach out to us on Facebook. You can just look for Rankin Insurance Group. It'll come up. You can find us on LinkedIn, Rankin Insurance Group. You can also just key in my name on Facebook, LinkedIn, Twitter, Darrin Rankin, Darrin Rankin, and I'll pop up in all the social media platforms. But it's a non-pressure conversation. Just reach out, ask a few questions. Let's have a quick discussion. Take the information back, and just do an assessment for yourself and decide if it's something you want to discuss further. But just pull the trigger and begin the conversation, so that you don't leave loved ones scrambling financially if something were to happen to you.
There you have it, people. Words to live by. So don't just listen to this information and say, "Oh, those are pretty good ideas." Let's make an action plan and move on that action plan. Your loved ones will thank you for it. Until next time, be blessed.